moderating this panel with our amazing panelists, where we're going to talk about everything around banking for the future. So, as we all know, traditional banking is being challenged by neobanking, new credit, and different lending opportunities, with digitization coming at the forefront of, especially within the fintech space. As we know, fintech in Africa has pretty much been booming. So we're gonna talk about where we are right now within those different aspects, where we're headed, and what your business is doing within that space. And hopefully we'll also be able to get some nuggets in terms of what we see the future looking like, both in the banking side, how DeFi is playing a role into it, and hoping for a great conversation. But to kick things off, I think it would be good to actually know a little bit more about our panelists. So, Mark, we're gonna start with you. It would be great to learn more about Absa, what you do at Absa, and maybe a little bit more about yourself as well. And then we can just take it down to Meghan, and then Michael, and then Abdul.
Thank you. Can you all hear me? Can everyone hear me? All right, perfect. So, afternoon, everyone. My name is Mark Akakpo. I'm an associate in the Absa Investment Banking Division in South Africa. I'm currently within the M&A team, so I look at, from an advisory perspective, I focus mainly on industrials as well as financial institutions. So, in terms of just a little bit about myself, I'm actually Ghanaian. I was born in Ghana, but grew up in South Africa. It was such a surprise coming back to Ghana, and everyone was trying to speak away to me at the airport, and I struggled to respond. I do know a few words, so at least that got me through the chaos. So I'm looking forward to the discussion, and I think it's great to actually have the opportunity to speak from a banking perspective. I think I've heard a lot from the various panels that have gone beforehand, and I look forward to actually give a banking perspective of what's happening in the space.
Thank you, Mark. Meghan. Yeah, thank you. So I'm Meghan McCormick. I'm the co-founder and CEO of Oze. And I really feel like Oze is a company that kind of bridges worlds, right? So we work with SMEs. We help them move from paper record keeping, cash offline, to actually digitizing their records, keeping a digital ledger book, having them accept payments, invoice and do receipts digitally, move from just selling offline to also selling online, and really kind of be the one to hold their hands and transition them into the digital era. At the same time, we also work with financial institutions like the names you see on the brick and mortars on the side of the road, to help them actually tap into this market of SMEs. Because audited financial statements by PwC or an equivalent is unaffordable for SMEs. Collateral excludes young people and women. And how can we get them to actually embrace technology, embrace new lending methodologies, and actually be able to build a growing and profitable portfolio? So we branch between the past of paper and the future of digital, and how banks can actually go from their past old school processes to also digital. So happy to be here.
Yeah, happy to have you. Thank you, Meghan. So Michael?
Hello, everyone. This is my first time in Ghana, so thank you very much for having me. My name is Michael Kimani. I'm a co-founder of Fonbnk, and I'm responsible for growth across Africa. We are an on-ramp for emerging markets like Africa and Latin America into the crypto Web3 economy. And the reason why we are special is because unlike a lot of financial services companies, we use airtime. So we allow our users to onboard into the crypto Web3 economy using prepaid airtime. As many of you may know, Africa has over 90% of mobile subscriptions are prepaid, and in Latin America is roughly the same, over 60%. We have about 250,000 users right now. We are about 16 months old. Thanks for having me here.
All right, welcome to Ghana, and it's really great to have you. Abdul?
Good afternoon, everyone. Hope you can hear me. So my name is Abdul-Jaleel Hussein, Chief Operating Officer for Affinity Africa Finance. At Affinity, what I work to do is to help set up the business in Ghana. Affinity is an investor and operator of financial services across the African continent. The objective of Affinity is to set up branch-light and tech-driven full-suite financial service products for the unbanked and underserved across the African continent. Ghana is where we're starting from, so I'm responsible for helping the team to roll out operations in Ghana. Effectively, what we're doing is combining fintech with traditional banking to serve the unbanked and underserved, primarily the unbanked, and leveraging a lot on partnerships. And today's session has been really insightful, definitely picking up a lot of partnerships we can have in achieving our objective as Affinity. So I'm really happy to be here. Looking forward to the conversation.
Yeah, looking forward to the insights you're going to bring as well. Thank you. So I thought the best way to kick it off is from looking at all your different businesses. You guys have customers that are pretty much in similar places. And when I say similar places, I mean majorly the unbanked. I mean, except for you, Mark. I mean, you are a bank. But I thought it would be interesting to kind of get your different perspectives. Mark, starting with you, especially as a legacy player in the traditional banking space. Like, what is your approach to banking the unbanked, right? Individuals and SMEs, and how would you say that has evolved over the years?
Okay. I'd just like to start off with the term legacy. I'd just like to drop that and say mainstream, rather.
Mainstream.
Because I think in the space that we're speaking in technology, if you speak of legacy, you speak of entities that are obsolete, outdated, and so on. So, and the reason why I say that is because, Absa has been a leading innovative bank, right? Absa has actually introduced a lot of innovations in the past that may not necessarily have seen the mainstream, maybe seen in the mainstream media, but has actually contributed to innovations that we're seeing today. I'll give an example. So in the early 2000s, Absa was actually the first bank globally to offer multi-channel platforms for its customers. This includes, going to a branch, internet banking, and then the one that we all know, mobile banking. But a lot of people are not aware of that. So in terms of how Absa has evolved over the years in terms of penetrating into markets that they don't, or into customer segments that they wouldn't necessarily normally service, is that they identify that partnering up with entities that have the infrastructure and the technology to play in that space and are more nimble to meet the needs of those customers directly, it would be more beneficial for them to partner with those. So we, over the years, have actually partnered with a lot of the fintechs, both here in Ghana and across the continent. As a Pan-African bank, to drive growth and value, we believe in collaboration, right? And that's how we've evolved over the years, and that's how we've tapped into those other markets by using collaborations and partnerships with the entities that have the ability to actually service those. Because as a large bank, right, we're not going to go and open branches everywhere. Economically, it doesn't make sense. So how do we still service those guys? Those customers in those communities by actually partnering and engaging with those entities that are already in there and are able to actually provide those services and products to those customers.
Yeah. No, so partnerships is a big play for you guys when it comes to penetrating customer segments that you're traditionally, let me drop the traditional side of things, that you would normally not have access to with your bank, which is definitely a good approach. And who knows, there might be some partnerships here or partners here that you could possibly engage with as we move forward, especially after the session. Okay. So still in that same breath, Meghan, I'm going to hold you off for a little bit, but it'll be great to hear from you, Abdul, still in that same breath, like what your approach is to, I would say, banking the unbanked, and how would you say that has evolved since you guys launched?
All right, thanks. So essentially, what we've done is to look at our customer segment across two levels. We call, internally, we label mass market and mass affluent slightly differently, and our definition is around how they interact with technology. So we define, we're aware that in some other places it's about the income levels, but from our perspective it's how customers interact with technology. We believe that, or we've labeled the mass market as those who are not necessarily digital savvy. They would not necessarily spend their money on data, even if they can afford it. They would gravitate towards low fidelity and so on. They are very sensitive to fees, and they would typically be the unbanked and underserved. There is the mass affluent who we believe or labeled as those who are digitally savvy, tech savvy, are on their apps, are on social media and all that. A lot of them are fully banked, but a bit of them are underbanked or underserved, as we choose to call it. So our approach towards the unbanked in particular is one of digital, but it's one that engenders trust, because from research we've done, and we've had a benefit of piloting for a while now, we've seen that in order to build trust, this segment requires that they are dealing with a person. I mean, they're dealing with someone. They know that there's a physical person that they can talk to. At the same time, the friction in terms of onboarding prevents them from accessing financial services. So if they have to walk into a bank and they're asked to bring proof of address, utility bill and all that, they just simply won't go in there. So the first thing we've had to do from a product standpoint is to leverage on a low KYC avenue that the regulator provided to be able to onboard this group of customers, where with only their ID and a selfie, they can do that. They can choose to do that either via themselves through downloading our mobile app, which from our experience, they wouldn't do that. So then we have proprietary agents who go to them and help them onboard. So our approach to them is to have these proprietary agents who go still digitally and is able to help them onboard within a minute or two. They have a bank account, and once they are onboarded, they can transact through USSD or the agents while they come around. And we've seen that to be really, really successful in onboarding the underbanked and underserved. What is important is to bring them in seamlessly once they come into the fold, because a low KYC product does have some limitations in terms of transaction value and all. But the most important thing is bringing them in. And the transaction values are pretty decent for the level of incomes, average level of incomes in the country. Once they want to go above that, then we go into the space of enhanced KYC. But at that point, they are already in the banking system, so it's much easier to upgrade. So we saw that as a potential issue that it was a key barrier to getting people in terms of the KYC and so on. So that's really key for us, and we believe we've been quite successful in getting that.
Yeah, I think touching on the fact that the first thing we really need to do is to kind of bring them in where they are, instead of trying to force solutions on them that they can most likely not adopt at their particular stages. Which actually brings me to you, Michael, at Fonbnk and your focus on airtime. How did you determine that to be the best way for you to get your customers in to start using your solution or the product that you currently have in the market?
Thank you for that question. I think basically, if you are a user of a Fonbnk application and you want to access crypto dollars or crypto, on our platform, you can use airtime from any mobile carrier for as little as cents, and you're able to convert it or swap it into like a crypto dollar balance. I think I give credit to my co-founder, Chris, who's not here. He'll be the best person to answer that particular question. But what we are learning right now is that airtime is really a great way to onboard people into financial services. I think all of us here are aware that there's more SIM cards in the world, that there is mobile money accounts, than there is ATMs, than there is crypto wallets. Also, airtime, prepaid SIM cards, which host airtime, has a lower barrier of access than any other financial service, such as bank accounts or mobile wallets. Also, most people are already familiar with using airtime from the interaction with mobile phones. And it's really, when we talk to users, I think we find sometimes that they may not have any money in their pockets, but they have airtime. So I think that has been really, it's been great for us in just being able to onboard users quickly into a space that's traditionally quite difficult. A lot of crypto startups find it quite difficult to onboard users in these markets because of all the things around crypto addresses, and then sometimes a lot of these crypto services, if you want to access crypto, the minimum amount is something like $10. So airtime has really helped us to really resonate with young users in this market. And just at the very least, I always tell people that if you've never heard about crypto, you don't have to spend so much to try out crypto on our application. So I always say our application, at least, it's great for just at least getting people to test crypto, and that has really made it easy for us to grow.
Yeah, no, that's very innovative, and I think you might be, the first, if not one of the very few that actually are using airtime as a way to onboard people into the Web3 space.
Yes, and actually one thing we are actually the few, I think I haven't come across anyone else who's using airtime on-ramps into the crypto economy. And the great thing about airtime actually is it's been able to exist in this fine space and just right in between some of the regulations that affect a lot of the crypto companies that try to, let's say, connect bank accounts with crypto or connect mobile wallets with crypto. As you may know, in some of these markets like Kenya, Nigeria, and Ghana, the central banks are not allowing these services to plug into. But airtime kind of exists in a sweet spot, and it's allowed us to just slide in and exist in the market and grow to 250,000 users right now in about 5 markets.
Oh, that's great.
Yeah.
Okay. So we're going to switch gears a little bit, and Meghan, now back to you. So now thinking about your business model, and you're primarily B2B, right? And as we've kind of touched on a little bit across everyone on the panel on the different services that your different businesses offer, I think one of the main ones you offer is lending, right? Now, as a data-driven business, how do you make the decision on who gets access to credit? I know when we think about traditional banking and providing loans, a lot of people think about collateral, right? But then a lot of individuals that probably need those, I guess the smaller ticket sizes don't have this collateral to put up. So how do you bypass that, and how do you determine who gets access to a particular amount of credit at first and then over time?
Yeah, it's a great question, because when I first, from my academic background, we'd study the SME credit gap and why can't we surmount it, and the problem of access to credit is really coming from two sides. It's coming from both the SME and the bank. And I think a lot of the kind of scaled interventions have been providing lower cost of capital or first loss guarantees to the financial institutions from development finance institutions. And that fundamentally doesn't change the problem. They might get a big chunk of money from World Bank or IFC and then have to onboard it into companies that can take a $500,000 loan, $1 million loan. And that they would call that the missing middle. But what we're really missing is most of the missing middle, but also the on-ramp into becoming those companies that can consume that much debt. Like, your first loan is not going to be $1 million loan. It should not be $1 million loan, right? And so part of it is our innovative methods. I'll go into that for assessing credit risk. But what I think Ose's big innovation is that we use technology to actually free up the money that's here in markets supposed to be lent to SMEs by lowering the cost for those banks to lend. Right? When I first got here, we did a co-creation workshop with one of the very large banks here. And we mapped the process from application all the way through to disbursement, and fax machines were used twice in a process. This was in 2019, fax machines. I don't know how to use a fax machine, right? And so I asked them, okay, well, how many SME loans have you successfully done this year? And the answer was none. And so that is like a huge thing for us, is how do you get banks comfortable with this idea of algorithmic lending, uncollateralized lending, to look at it really like a portfolio, right? Like you might lose some, but you're also not losing that cost of going out to the shop, trying to assess what assets are there. So, that same bank with the fax machines, it took minimum 14 working days to get a loan. Think about, a banker's salary, 14 the hours, right? The FTEs involved. Already the profits from that loan are gone unless it's a sizable loan. So that's really the first step to making access to capital, is to actually fix the system so that the capital, when someone is able, now they can take a loan. So the other side of that is the SME. If anyone has ever talked to a small business owner, maybe your tailor you really like, or your gardener, or just someone down the shop, and you say, okay, I'd love to help you, what do you need? I need money. But what we find is that most of them are not actually ready for money. So I'll use the analogy that I use with them with you. Your business is a bucket. If you're not keeping records, your bucket is full of holes. So I can give you money, I can pour the water into your top of the bucket, but it's all gonna drain out. And so you won't have any money to pay back your loan, and you won't have any retained earnings. So the first step with Oze is patching that bucket. Just the act of taking the steps to patch that bucket, right? Digital record keeping, invoicing, payment reminders, digital payments, that kind of generates behavioral data that shows, okay, this is someone who wants to patch their bucket. This is not someone who's looking for a quick, Momo loan to take and run, right? And so that, I would say, more than anything that we do in terms of machine learning to predict credit risk, is the most important thing. Then, once we have that data now, I think 90% of transactions in Africa are still happening in cash. So being able to, because they're now keeping digital records, being able to see their bank, see their mobile wallet, but also see their cash transactions, gives us a much fuller picture of what the turnover in that business is. And we can use all of that data to give them a loan. So now, instead of having a business with negative profit margins, no record keeping, sells on credit and can't collect, who uses Momo sometimes and goes maybe to take a quick loan, they can take 100 CDs, like at today's rate, $10. For our businesses, right, that use smartphones, $10 isn't gonna do anything to change their business. But when you're able to also, bring in the behavioral data and bring in the cash data, that same business, right, we're just looking at two different realities, that same business might be able to borrow 5,000 CDs and pay it back. And so yes, of course, we're about assessing credit. So many people are about assessing credit, but we're really about fixing the system and lessening the gap between the operating realities of the banks and the operating realities of the SMEs.
Okay. No, so it's both a qualitative but then also a quantitative process for you guys.
We turn kind of soft data into hard data, right? So
Got it.
is somebody interested in building their business skills? Is soft, but what percentage of the business tips that we send out do they read turns that soft data into hard data?
Okay. All right. So, Mark, actually, I think taking a different lens from what Meghan has said, I think it would be great to kind of hear your thoughts on how Absa does SME lending, but then also, let's say if you have any insight on the individual lending as well. It'd be great to hear that.
Okay. So I will speak mostly on the SME lending, coming from an investment banking background. I think, look, I fully agree with what she said in terms of the systems are still outdated. On a branch level, it's difficult for an individual to go into a bank and say, I want a $100 loan, right? Yeah. Compared to, let's say, a well-established business where the bank is chasing them to offer them loans, right? And I think that's where technology and innovation bridges that gap. A large bank like Absa is seen like, let's say the Titanic, a big cruise ship that's trying to turn. And it's gonna take it forever to turn to face the direction where where the customers want to go. So how do we accelerate that turning effect, right? One, we could either develop the technologies required in-house, which will still take time because there's so many levels that you have to go through before things get approved. So a quick way to accelerate that is to actually, partner with entities that are already walking that road. So you can see you can actually use the analogy. I will still continue with the ship analogy and see the fintechs as more like tugboats. Mm-hmm. When a big ship is trying to go out to sea, there's tugboats that assist it to turn. So for us to bridge that gap very quickly, we rely on those partnerships. Because we've actually identified that we can't do it by ourselves. Well, not that we can't, it will take longer if we do it by ourselves. In South Africa, I'll use South Africa as an example, where the banking system is quite well developed. There's so many financial services companies out there that are providing, loans to SMEs, and they're actually competing with banks now. Yeah. And then if we look at the rest of Africa, SMEs are defined quite differently. SME in South Africa is a company that's probably earning, $10,000 as a minimum, okay. While an SME in Ghana, $500. And for a bank like Absa, that's a massive discrepancy, and because the amount of effort that I have to put in to provide that loan to that SME is the same as I would in South Africa. So in Ghana, leveraging those technology companies that can accelerate that process at a cheaper rate, enables us as an entity to actually provide into those markets. Yeah. So once again, it goes back to us leveraging what's already there, than rather trying to create things from scratch.
Yeah, through the partnerships and through the other businesses that are already doing it. Okay, no, thanks for that. So, Abdul, given that you're now, you guys operate at an intersection of traditional and digital banking, right? In your drive to create that digital forward and I would say branch-light financial institution, what are some of the challenges that you face moving from traditional to, legacy to digital? And how are you dealing with the issues of trust in a low trust environment like, I would say, or in what people see as a low trust environment like Africa?
All right, thanks. And I'll probably prefer traditional to legacy.
Okay. So I'll switch it between both of you then. Okay.
I'll go with Mark in that case. It's the good thing for us is we actually just starting, and that's probably why I would prefer traditional, because there are no existing systems that we have to deal with. The major issues that impact us, I think, impact most of the players across the country and the continent, I must say. And for me, the first and foremost is around the infrastructure. I mean, in trying to build a business driven by technology, there's infrastructure on your side as a business and infrastructure on the customer side as well. I mean, thankfully, there's work ongoing around identity in the country, but it was a big deal in terms of how to even identify where customers are. And from a lending standpoint, yes, from just transactional standpoint, it's still an issue from KYC, but the moment you have to take depositors' money and give out, the threshold goes up a notch, and it's definitely an issue. So infrastructure around identity, infrastructure around just the physical tech infrastructure, around stability and all that would probably be a key challenge. The other bit I'd point to is just around cybercrime. I mean, from the earlier session we had just before lunch, it's something that we really need to start paying attention to. Every entity that has any interest in this space, and even us as individuals, it's a risk that is probably much closer than we think. And I believe it's one of the key challenges in terms of addressing it. The next one I would want to talk about is around regulation. I think that there's, earlier in the day, the regulator did speak to us, and credit to them, there's a lot of learning and flexibility with the sandbox and all. But I think in terms of speed to decisions, there's still some work that we need to work with the regulator as an industry to ensure that, because getting things done quickly and instantly is the way to go. That's what customers really want. That's what means value to them. So if you take a couple of months to get certain things out in the market, it might be not useful by that time. So those would be some key challenges I would speak to. In terms of trust, in my earlier submission, I did talk about the visibility that our customer segment, they want to see a person, they want to see an individual. So you find that, yes, there's a lot of, the digital economy is there, and people buy stuff off social media and all. But largely the unbanked, who are our key customer segment, they prefer, especially when they have to do with their money, they can buy something off you because there's an exchange there, but when they have to keep their money with you, they want to see you. So you need to find a way to get that done at minimal customer acquisition costs, because one of our primary objectives to achieving our aim is to be able to minimize our operational costs so we could pass that on to the customer segment. So in that light, we don't even charge fees on our current accounts. So as much as possible, trying to minimize our cost of acquisition is primary. So we do have our agent network, proprietary agent network, to be able to resolve the issue of trust. The other issue just has to do with consistency of service delivery and ensuring that whatever you are deploying to them works. I mean, it's very basic, but it's instructive that there's consistency in the fact that if their agent goes there and they deposit the money, they want to see an instant message that I've got value for my 10 cedis. They don't want to say, okay, in the evening or tomorrow morning, you see that. They want to see it immediately. And that's the experience we've had, that where you are able to show them that you've deposited 10 cedis, even the agent is there, and you can get a text message to say this is the 10 cedis you've deposited. They are much more comfortable in that sense. There's still a way to go in getting the largely unbanked to be conversant with the technology and do it themselves. And we're working through financial literacy. That's also another way of improving trust, both technology and financial literacy, because the two sometimes go side by side, to try and get them more comfortable with technology in a way to improve trust as well. So those will be some elements that we're working with at the moment.
Yeah, no, thank you on that. One of the things that I'm going to pull on, actually, and I'm going to throw it to all of you, is that regulatory piece. So as we know, regulations can change overnight across different sectors, but I think one of the ever-evolving sectors when it comes to regulation, operational regulations, especially on the continent, has been financial services. So for each of you that are able to answer, how do you build relationship with a regulator, in each of your different markets, especially when you operate across different markets? And just to throw something in there, does lobbying play a part in your business? And then, like, the licenses that you need, how hard is it to get, especially when you need to operate one segment of your business to another? Meghan, I see you smiling pretty widely, so I'm going to let you answer this first. So everything from building relationship with with your regulator, if lobbying plays a part, but then also licensing.
Smiling because I feel like every panel I'm on, I get myself in trouble with my regulator. It's a complicated space, right? So something like OZE, we didn't call ourselves fintech for the first 2 years. Like we were a SaaS platform, small business SaaS, right? And still, in the traditional sense, we're not pure fintech, right? We run other people's payments, right? We're a gateway to access payments. we help banks lend. Like, we're enabling fintechs to reach SMEs, but we're not doing any of that ourselves. So that puts us kind of in this interesting space in that regulation isn't really made for us. So in Ghana, we are imminently receiving our PFTSP license, which is the Payment and Financial Services Technology Service Provider license.
Mouthful.
Yeah, and we started getting that license because a funder wanted to fund a pilot for our credit scoring, and they were not comfortable with the fact that we were unlicensed. And so we went to the head of FinTech and Innovation, and we said, okay, like, we read everything, and we're still not quite sure. And they said, oh, don't worry, the regulation is coming. So we had to wait for PFTSP to actually become a licensing class before we could go for it. And I think regulation is really important, right? Especially you're dealing with a segment that still doesn't really trust money on the internet, still doesn't trust commerce on the internet, and so you want to protect them, right? I think part of why we started in West Africa, not East Africa, is we were watching the talas and branches kind of blow up in Kenya and saying, okay, well, let's not touch there until the regulation is figured out and there's a lot more consumer protection or SME protection. But it's really hard because now I'm going into Nigeria, and whereas in Ghana now there's a license for credit scoring, in Nigeria there's not. So do I play with fire and be unlicensed? Or do I go one step up and get licensed as a lender? Because surely if I can lend, I can credit score. And I think the biggest issue the challenge we're working through collaboratively in Ghana is that one step up is not a step, right? Like the first step is like here. Because of some of the regulations around nationality and ownership, that you kind of need to climb all the way up to become a bank before you can do something like allow someone to access PayStack through your platform. And so I think trying to break those steps down into smaller steps would be balance, I think, something we really appreciate Ghana for, which is the stability, with also giving fintechs a kind of pathway into creating innovation, because I think it's one of the main reasons why Nigeria is full of digital lenders. It's not just their population size, right? Because you can make good money in Ghana too, but the cost to even get started here is just so much higher.
Okay.
So hopefully I'm not in trouble.
I think you're fine. I think you're good. All right, so anyone else when it comes to licensing and building a relationship with your regulator?
I think regulation is like, I've been hearing about regulations since as far back as I left university and got into like working in the startup industry, especially for crypto companies. I remember in 2014 I was working for one of the earliest crypto companies in East Africa. It was known as Bitpesa, and they got shut down because of regulatory concerns. And it's been 8 years later, and that stance has not changed. I still hear about it in every conference circuit that I go to. So I think as entrepreneurs, as founders, as startups, we just have to accept that there are some things we don't have control over, like regulations and governments and the power of the state, right? So I think the smart thing to do really is to how to find a way to build your business within the existing compliance, which is what we've done at Fonbnk. Our company is registered in Washington, D.C. It's been designed to exist within the gift card regulations under FinCEN. So our application, you can't use our application for sending thousands of dollars. There's a daily limit. There's a cash in, cash out limits that's designed within the existing regulations. But even the design itself, so the design itself is also a factor of the founder himself, because the founder has a background in banking. He worked for Goldman Sachs. He has experience having worked for the Federal Reserve. So it's really hard to say, like, by the time he's sitting down to design this thing, he had already thought through all the existing regulations and how he was just going to find a fine spot, sweet spot. And that's been really helpful for us, because it's really made it easy for us to easily get partnerships with Visa. We are part of the Visa and MasterCard crypto programs. We were part of Techstars, where we worked with Western Union. And for us, we really see it's really made it easy for us to get these types of multinationals, yeah, especially from the United States, which is one of the countries with the toughest financial regulations. And it's been really easy for us to secure partnerships with them because we are designed to fit within the compliance, you know? So I don't know, I think my advice really, especially for crypto entrepreneurs, is like don't try and fight the system. Really just find a way to exist within the rules. Otherwise, the regulators are always going to beat you in terms of time. They have more time than you have. You are under pressure from investors. So yeah, I think we should try and design within existing regulations, yeah.
Yeah. Go ahead.
Yeah, so I think we've just had we had a license earlier this year, and I mean from that journey has really taught us that, and it's a deposit-taking license, which was probably the first that the central bank issued after the cleanup in the country. But I think what we quickly learned was that first of all, it's really important to understand the interest of the regulator, and from our perspective, it's purely to protect the person who is bringing you their 100 cities or their 50 cities to keep safely for them. And lessons from what happened recently in Ghana show that it's really important to protect the depositors' money. So for us, that was a key lesson to learn that interest. And secondly, to then ask ourselves, what do we then do to demonstrate to the regulator that they can not go to bed, but they can be comfortable that we're not going to mess the average depositor's money up, either by lending it out indiscriminately and not using the right lending models, or doing other things in terms of not having strong corporate governance. So, and it had to be, we had to achieve that through a lot of engagement. And I think that's one thing that we find that you would have to literally be more proactive in engaging them to really understand every step of the way, what do you have to do to ensure that things go quickly and not assume that, okay, maybe unlike dealing with another private entity where you go about signing an SLA and expect that the other person would do what they have to do, with a regulator, you have to engage more proactively. Because at the end of the day, they have to protect, they have that mandate, and they have to ensure they do it. So it more becomes your interest against the interest of the entire country is what, and obviously the entire country's interest would always win. And as an entity that's planning to go Pan-Africa, one of the other things we are beginning to think about is having to deal with regulators that are different across different countries. And as a matter of fact, it scares us, just thinking about the fact that, I mean, you've learned how to deal with the regulator in Ghana, and maybe in a year or two, you have to learn how to deal with the regulator in Kenya as well. And who knows, the regulator in Nigeria, and so on and so forth. So that's one. I don't know how that can be solved. Maybe it can never be. For as long as there's sovereignty, it would always be like that. But that's the biggest challenge that we're beginning to think about. But in terms of our experience in Ghana, is really about engaging more robustly and proactively every step of the way, and not assume things to move smoothly, because they usually would not unless you engage.
Yeah. Okay, so do you want to take a stab at it? Yeah, it should be.
Hello. Yeah, there we go. Now, I just wanted to, add on top of what Abdul has said. It's very, very important for startups, fintechs, and so on to actually engage the regulator. The regulator is not there to stop you. yes, I may be speaking from a bank perspective, but even the bank has to deal with regulators, and we don't always agree on things. But at the end of the day, the regulator has only one mandate, and that is to protect the interest of the consumer. If I'm giving you my $100, you go out there and you go and lend it on to somebody else who doesn't pay you back. How do I get my $100 back without that protection from the regulator? Mm-hmm. And everyone is in a learning phase. Everyone is learning every day. As much as the crypto entities are coming up, they're also learning as they go ahead. And being able to provide those learnings to the regulator helps the regulator to also advance their understanding. In South Africa, there is a fintech division that's been started within the SARBs, which is similar to the one here in Ghana, at the Bank of Ghana. So that is driving the understanding from a regulator perspective, which is very important, because how are you going to drive change if the powers that be do not understand the change you want to implement? And the only way you can do that is actually going to them, taking them by the hand, and walking the journey with them. And I think I would like to just re-emphasize that, because I've heard a lot of conversations where guys say, the regulator is preventing me from doing business, so we're going to find a way around it, And to be honest with you, the bigger you get, the more important the regulator becomes. When you're still a small, I use the analogy of, when you're a small, in your early stage as a startup, you're like a mouse, you're very nimble, you move around, nobody sees you do what you need to do. And then you become the size of an elephant, you are going to be spotted. So you might as well walk that journey with the regulator, let them understand, let them put the regulations in place so that you can do business the right way for all. Yeah.
Thank you, Mark. So based on what all of you have said, the general ways to deal with regulators would be engaging proactively with them, existing within, but then also there's a level of obedience you have to have, so then you don't end up getting caught and losing your whole business. Is that a good summary? Okay. So we've now talked about the banking side of things, and pretty much everyone's different take on their respective businesses. So I think now we want to look at what the future looks like. And a lot of what the future is leaning towards, as we know, is DeFi. So the first question I have there is, what use case for DeFi are you most excited about? And thinking about it in your respective businesses, and why? And Mark, and I guess a little bit for you, Abdul, in the legacy and traditional banking space, how are your banks thinking about it?
Okay, thanks. So at the moment, we actually haven't put a lot of thought into decentralized finance, because mostly our aim right now is to try and include as many people as possible into financial services, where we, however, see opportunities later, and it's an area that we're all learning, and this summit is one aspect of that helps in the learning process to pick up use cases that we can use to ultimately solve the problems that we've all been set up to solve. But I mean, there are various areas we're thinking about, and it would have to be from partnering with those who already are in that space. So areas around KYC, data analytics, to see, I mean, it is still an evolving area, and there are trailblazers, I'll call them, who've already started the way. So our approach would be to work with these trailblazers once we understand the space a little bit more, to help us leverage that to solve the problem. Ultimately, for us, everything we do is to solve the ultimate problem of financial inclusion. So any technology, and we believe there's opportunity within blockchain to help solve that, especially as it matures, and the cost, because cost is very critical for us, as in cost of financial services. So as it matures and the cost of transactions minimizes, there is an opportunity there for us to leverage and partner with other entities in there to make sure that our customers and our customer segments are able to benefit from that. So that's currently where we are with I would say blockchain thinking at this moment.
Okay. Thank you, Abdul.
From a banking, this thing's not. Oh, it's on now. All right. From Absa's side, look, we are governed by the Prudential Authority, and we play within the parameters that's provided to us. So that's from the Absa side. What I'm going to say now is my views. So I just thought I'd just put that out there.
Okay.
Look, I think the DeFi space provides a lot of opportunity to remove the frictions that are created by the current financial systems, the frictions that contribute to the additional costs that customers, face. And do I see it like becoming the only system around? No. What I see is more of a hybrid system, which then allows banks as well as who are in the centralized system to operate alongside those who are in the decentralized system. And there's benefit for both, because centralization allows for better control in terms of how customers are protected. Decentralization provides opportunity for customers that, or not even customers, for potential customers that may not have been previously been served by like the likes of banks, the likes of Absa, because now you have this barriers that have been put in place, and I call them barriers because even for the bank, it makes doing business a little bit difficult. These barriers that have been put in place to be removed and provide you access to the customer directly. At the end of the day, whether it's centralized or decentralized, the most important element in that whole value chain is the end customer. How do I ensure that the end customer is serviced best and they get what they are looking for? So I do not see one taking over the other, or the other not existing at all. I see both existing in sort of a cohesive ecosystem in the future.
Got it. So, in your opinion, we'll always need a combination of both?
Correct.
Okay. All right.
Maybe I'll go next. I think 2 points. I think DeFi is a great opportunity for new avenues of capital for financing in our markets. Because the banks, there's some asset financing, there's some types of financing that they don't like or don't fit within their profile. And what we've been seeing happening, for example, with Goldfinch, there's a DeFi lending protocol known as Goldfinch, and right next to where I live, there's this company known as Tugende, and Tugende is an asset financing company. And they were able to secure $5 million from this DeFi lending protocol, Goldfinch. And if you talk to them, when they were having conversations with banks, trying to get the same amount of capital, it was difficult conversations. So at the very least, I think I'm excited about DeFi because you're going to have new capital owners from different countries who are willing to take on the risk of some assets that local banks may not be able to take. And I think that's a great win for the unbanked and underbanked. I think the other thing I'm excited about DeFi is the new models that it enables, because DeFi is really just like an automated order book on a blockchain between two sides. And we at Fonbnk, for example, the way we use it is we have a peer-to-peer marketplace where we provide micro-entrepreneurship opportunities for young people to provide liquidity to our marketplace and earn from that. So if you think about normal fintechs nowadays, when you go through a normal fintech and you're converting like your mobile money into something like dollars, it's that company that's earning all the fees associated with that. Whereas what DeFi is enabling is you can have many participants come and provide that liquidity for that. And for me, that's powerful because it's redistributing these types of revenues that would have gone to a single company. And another business model that I've seen that's interesting that's emerged out of this DeFi is a project in, I think it's either Mozambique or Malawi. It's known as Empower. And basically it has created an NFT that represents a mortgage in this type of country, in this Malawi. And then it allows lenders of capital to fund those projects. And then the revenues that are collected from the repayments go back to those capital owners. So I find that quite interesting that they've combined NFTs with real world problems and new sources of capital to make possible some projects that were not possible.
Okay.
I think like Mark, DeFi is something that excites me for the future, but is not immediately what Oze is working on today. But one of Oze's core values is trust. And we want to build a trusted community, a community where businesses do business with each other and therefore all grow together. And so right now we're really creating systems in Oze so that people want to bring on their value chain, right? There's a reason to bring on your B2B customers. There's a reason to bring on your suppliers. And as more and more transactions happen, with Oze customers or with multiple Oze customers working together to kind of, pool their resources to get bigger contracts, then it's interesting to look at, okay, what would it look like if there was a token that held value within the Oze community? So that if a supplier in Nigeria is working with a manufacturer in Ghana, we're not turning Naira to CD, CD to Naira, but we're all using this Oze token to do work together. But these are future things. Right now, we're really focused on building that strong community of entrepreneurs.
Okay. So it's safe to say that there is, for lack of a better term, excitement about the opportunities that DeFi brings to pretty much just business, but a lot of it is still forward-looking and not being used right now. Is that a good summary of that? Okay. So just in the interest of time, I want to give the audience a chance to ask questions. So we have about 5 to 10 minutes. So if anyone has questions, please raise your hand and we'll get the mic to you.
Yeah, thank you. So I was hoping there will be discussions around open banking when we're talking about bank of the future. I'm particularly interested in how the banks might evolve in an open banking environment, because there's been speculations around whether the traditional banks will become platforms where they provide the APIs to fintechs who then funnel the financial services to the end users. But I was hoping to hear your perspectives on that, and also the perspective of the regulator. I think the last seat could be the regulator. Just kidding. Thank you.
So just to summarize what you were asking, so you want to get perspectives on open banking, especially from the traditional and legacy banking point of view. Okay, I think Abdul, Mark, that would be for you if you guys have thoughts on that.
Okay, so yeah, I can share some thoughts just to point out, however, that we would not be one of the big banks that you would require to share APIs. We would want to actually ask Mark to do that for us as well. But I think open banking would definitely provide a great opportunity. I think if I think about that, and if I believe that's probably more immediate, and will be able to get us as an ecosystem to coordinate more. And I mean, at the end of the day, and I believe it will also be provide the regulator with a lot more comfort, in my view, if that can scale across the continent. It's still a very early stage concept on the continent. But I think for players like ourselves who are more or less a hybrid between the traditional and fintech, it is definitely an area that we're exploring, because there are some solutions we would love to provide, especially for SMEs, because the next phase of our launch is around how do we make payments, transactions, and lending easier for SMEs. So partnerships would be key in that, and also just ensuring that we're able to have that platform with more established, I'll put it that way, existing players who already have the large corporates, because at the end of the day, you're looking at an entire ecosystem that includes very large multinational corporates who have SMEs that are essentially either suppliers or buyers of them, and they transact with them. Once you have them on different banking platforms, it creates friction, that creates inefficiency, it increases cost. The SME is unfortunately the one who tends to suffer because the large corporate is able to negotiate all the fees away, and then the banks will then pass the fees on to the SMEs. So ultimately, if open banking gets into mainstream, it makes it easier to connect all these dots together, and that should reduce a lot of friction and cost, and be able to reduce cost of transactions for SMEs. So it is an exciting area. I'm not really sure how we would get it going, but it's definitely an area to watch, and we are definitely interested in exploring that.
Got it. Thank you, Abdul. Go ahead, Mark.
So I think from my side, open banking creates opportunity for traditional banks to actually innovate, because you're now not just competing with, let's say in South Africa, where there's what we call the big five banks, and customers are circulated amongst those big five. So now open banking enables, neobanks to pop up and, set up shop and provide more convenience and less frictional services to the customers. And this will be the same customers that are being served by the traditional banks. So what will that lead to? It will force traditional banks to then, drive innovation in-house and see how they can, provide a better solution to the end user, the end customer. Because it's like, sometimes I think of traditional banks as, we sit up there on our ivory towers, we've taken years of establishing ourselves in the market, and the customer has trusted us to provide a service for them. And sometimes we do become complacent in that process. And this is when, new technologies come up to challenge the norm. And I think a bank like Absa, we embrace those new technologies, and we see how we can better service, the customers, and see how we can actually move the bank forward. We have institutions in place where we incubate, these technologies and see how we can fit it into the business within the framework of the Prudential Authority, because we are, like I said, at the end of the day, we're still governed by those rules and those parameters. We can't just do whatever we want. But we still embrace those technologies and see how we can actually move forward as a bank. So open banking is an exciting space. I'm a big fan of it. And I hope that it does actually, get well established on the continent, because it has so much potential to actually drive, banking services for a very large population that is unbanked. Providing payments is one thing, but being able to provide a suite of banking services to individuals is actually liberating, right? If I think about when I was in university and I had a student account, or even before that, when I was in high school, I didn't have a bank account because I was like, what do I need a bank account for? But imagine if you could have platforms that could enable young people to actually get exposure to banking from a very young age, right? Wouldn't you say that those individuals would become better money managers in their adult life? I work with people that have studied finance and they still can't manage their own personal finance. So it has many potentials to actually alleviate a lot of issues that we have in the financial system. And I think open banking can provide that platform for that.
Mark, it sounds like we're going to be seeing you driving a lot of innovation within Absa.
This is why I'm here.
There we go. Okay. So room for one more question, if anyone has any from the audience. Okay, I'll take that as a no. But I want to give the panelists I want to give you guys a space to kind of say some final words from your perspective of everything that we've talked about, from looking at the way you operate and your relationship with your customers, to looking a little bit into DeFi, understanding that a bunch of you have not delved into it yet, but it is opportunistic in your point of view, to also now tapping a little bit into open banking and also discussing regulations or regulatory hurdles that you may be experiencing. Is there any additional thing you'd like to say before we wrap up today?
Okay, I'll go first.
Go ahead.
I think from my side, I'm really excited about what the future holds. Not just from a theoretical perspective, but to practically see what's being done. And I would just like to actually encourage everyone to keep doing it, because if you want to actually see the change happen, we need to be very practical about it, right? We can write all the thesis out there and say, this is the technology of the future, but if no one takes the leap of faith and say, I'm going to implement this and see what happens, we will never know. So it's actually great to be here and see all the innovation. And I think there's a lot that I'm going to take back to South Africa, firstly to my bank at Absa, and also, within the community of fintechs that we engage with on a regular back home in South Africa, just to see the development that's happening on the continent. I think guys should keep pushing and know that, look, the banks are not there to, they are in a way your competitors, but we're also here to work together. And I think they provide that historical knowledge that you can tap into. They provide that infrastructure base that you can tap into. And I think I would like to encourage actually more fintechs to actually reach out to banks and see how you can work together and move, the technology forward.
Thank you.
I would say I started by mentioning the 331 billion SME credit gap, and that's just the formal sector. It's a huge gap. Smart people, dedicated people, and billions of dollars have been trying to close it for decades, and they've been unsuccessful. So I think we can't keep trying what's been tried in the past and expect it to create different results than it has in the past. And so what really excites me is, one, partnerships, right? OZE takes a pretty contrarian stance in the fintech lending world to partner with banks rather than to raise debt. Because I believe that we can't do it without the banks, that we won't make meaningful market-shaping change without the banks. And then new technology, right? Paper ledger books are not going to be able to close this gap, but a combination of new financial instruments, new ways of analyzing data, new ways of collecting data, new ways of making that data useful directly to the small business owner can. So I think we're at a really exciting inflection point where we can close that gap. And if anyone here works with SMEs and you know what happens when a business finally gets access to the capital that they need, it's life-changing for them, for their family, for their employees, for their customers. And so it's hard work, but it's incredibly exciting work that we have ahead of us.
I don't think I have much to say, but something that's always on my mind really is I think our African economies have this problem where it's as if there's not enough money in the system. Like people don't have money in their pockets. And sometimes I wonder whether if you create 1,000 apps or 500,000 apps, how are we going to address where this new money is going to come from that goes into people's pockets? And I think right now, especially when it looks like we might be going into a recession, I'm really trying to see how some of the fintechs are going to get adoption, because if these people don't have any money in their pockets, why are they going to want to use your wallet? So I think we really need to go back to the drawing board and maybe rethink some of the models that we have built, or maybe fintech is going to stop becoming fashionable because other things are going to come up that address this core problem of how do I add more money in my wallet, right? So that's something that keeps me up at night. Yeah, and I'm also here to network with people, so if you just find me somewhere and say hi. Yeah.
All right, just to add, I think I just want to talk about problem solving. I'm really excited. since morning because, I mean, technology has evolved over the centuries and would keep evolving as humans to solve problems. And that's what we believe at Affinity, that every technology that we're exploring should be towards solving a problem for the continent. So just to encourage us to continue the good work in terms of the DeFi work that is being done and some of it being showcased here, and to just ensure there's adaptability to solving problems for Africa. Because there are fundamental problems with access to finance, with the affordability of the finance that we need to solve. And those are African problems. And the technology is more global, but as much as possible is to see how we can use that to solve the problems within Africa. So, but truly excited to be here.
Thank you so much. And please, a round of applause for our panelists. Looking forward to seeing a lot more collaboration between you guys, but then also between the amazing companies that we have on display today. So thank you so much for sitting for this panel, and looking forward to the next session.